we select which stocks to buy in the stock market? There are a few guidelines that we use to select a stock. The first one is the product of the company or the stock that we want to invest in. Is the product an essential product? Is it a high growth product? Does the company make good profit margins on this product? That's the first one. The second one is management quality. How do you assess management quality? You look back at their historical performance. What has their strategy been? Has their earnings been consistent? And what is the plan for the future? That's how you decide whether the management is high quality or low quality. The next one would be valuations. Now, valuations is another word for whether the stock is cheap or expensive. And there is no hard and fast rule whether you should go for cheap stocks or expensive stocks. Sometimes it's worth buying cheap stock. Let's say when the economy is not doing well, when the stock market is in a slow phase, it's worth going for stocks which are cheap. When the economy is doing very well and the stock market is in a bull mode, I think expensive stocks will do very well. And what makes a stock expensive or cheap? There's a ratio we use, price to earnings ratio. So you just take the stock price divided by the last reported earnings and you get a ratio. If that ratio is less than 10 times, it's most likely a cheap stock. If it's higher than 10 times, it's an expensive stock. The last metric we use to decide which stock to buy, that would be the risk profile of the investor. So for a young person, it's worth investing in riskier stocks which are high growth and which are cyclical. For, let's say, a retired person, you would want to invest in cheap stocks, in defensive stocks, in industries and companies which are mature.